hear you yawning.
Yeah.
That good of a day, isn't it?
Oh, let it begin. Let it begin.
Yeah.
Hey, well, let's dive in. Hey, everybody, welcome to our live profiling Q&A session. We try to do these weekly, and it's an opportunity for you. Some of you have some exposure to the profile and have used it as a tool. Some of you are trying to figure out, hey, is this for me? And that's why we have these, is really to help you make that discernment and see if it can help aid what you're trying to do in markets. We believe it's very effective, and this is an opportunity to look at it while the markets are in play for your benefit. Before we get going, as always, I'm mindful of risk. There is risk involved in all endeavors in terms of investment, specifically in tradable markets, whether you're trading in Forex or stocks or futures. So always be mindful of the risk. It's one of the few things that we actually have good control over as market participants, is how much we risk and where we seek to put that on. And then just as an overarching concept about what it is when we, in terms of how we approach the markets, we're both, our perspective is that we're intraday swing traders is typically what we're talking about on these calls, although we do play in different time frames as well, but we spend a lot of focus in that time frame. But we're not technicians specifically, we're not fundamentalists, we're behaviorists, and we use the behavior or use the profile as a tool to help us see behavior around specific prices, believing that not all price is as valid as another, and that's one of the key benefits of the profile. A couple quick welcome and introduction, just so you kind of know who we are. I'm Josh, I'm the founder of Trades Profile, and have been doing this for a while. Alongside me is JP, and we constitute the core of our development team. We've got some other guys on the team that are helping support traders as well. And we're a development firm. We're a skill development firm aimed at trying to move traders toward trading skill and consistency. So if you're still trying to figure out, hey, what is an edge in markets, or how can I get towards consistent profitability? Mindful, it's not guaranteed profitability. There are no guarantees in markets. We are, in some sense, storytellers. We have a narrative that we construct around the market, and then we look to express risk inside of that based on edge that has been seen and measured. But even that, when we put on the trade, there's no guarantee, and so we're always mindful of that. But everything that we do is based on our profile trading development pathway, which is a 4-month 16 module process to help traders hone in on 3 kind of core ideas. And that is that there are 4 behaviors observable in every auction, and you need to know how to observe those. That there are 4 questions to ask before entering a trade, and you need to know how to answer those. And there are 4 stages of auction competency, and you need to know which one you're in. And when you are moving along in all 3 of these, the overlap, the place where they all meet, is where we find consistent profitability. And then, and day in and day out, we express all this through something we call our trade plan, which is where we put these concepts into action so that it can hone mastery as we look toward that consistency. But today is non-farm payrolls. Next week we got FOMC. So every week when we do these, please bring questions. We're going to have open Q&A here in a second, but we typically try to kick off with an idea while you're kind of formulating the questions that you want to have. Those questions that you want to ask, feel free to use the Q&A box or the chat to seed those to us, and we'll get to those. But just real quickly, today is non-farm payrolls. It is one of the planned economic numbers that we tend to look at in part of our planning process. Another one is FOMC, which is the Federal Open Market Committee that sets the interest rates. That actually comes next week. Just here's a view of job growth in the United States. According to this number, we've been positive every quarter since May of 2010. And today's number, correct me if I'm wrong, JP, but today's number came out at 250K added.
Yeah, I think 250, 255, somewhere around there.
250, 255. So we had a significant, yeah. So if you add today's number in here, that's a significant add. That's kind of up here in the the higher quartile of what we've seen among numbers in recent past. I mean, I think at one point, what do you say about this? You just say that this economy, this market has been able to consistently add jobs every quarter for almost 10 years. And that's kind of a remarkable feat, actually. Now, there's lots of conversation we can have about, the quality of those and wage growth and so forth. But at the bare minimum, we can say, hey, there has been added jobs every quarter since May of 2010. How that specifically impacts the markets that we're in and look to trade is in terms of movement. And I want to just kind of go over here and look at how we identify some of this stuff. So I've got a market profile graphic here on the right, and then I've got more traditional 30-minute candle. This large movement right here, that's the release off of non-farm payrolls. Non-farm payrolls is released before the equities open in the United States. Typically leads to big moves in the bonds. If we pull up a bond chart, you'll see a significant move in the first hour, and then that they kind of struggle after that. We had a large move that took place on the release, and a couple things that we notice out of it. One, not only was this a large move, but also this order flow. So this is in this 30-minute period, this is the difference between orders placed on the ask versus orders placed on the bid. You can see just of the most recent trade, that's a significant number. This is the cumulative order flow for the session. This is the cumulative order flow for the week. This is the volume per period. This is a high volume release for the open, or for pre-market. That was a big number. They added a lot, obviously, to where we've kind of been all week, and set the stage for where we are right now, which technically we're in a trend day. We're in an open auction outside of range, so we had overlap in A and B period holding a gap, and then now we have every 30-minute have been one time framing higher as we have moved in this market. A couple of things of note that are interesting here. Is where we've moved from. So we spent 2 days kind of trading around this 83.10 level. That was what we would call a balance area. You can kind of see it here. You can also see it, if I get over to my, and back out here on my profile chart, we can also see this. There's a, gotta get to the pen tool here. There's an area of bounce. You can see the build out in the profile. Moves begin from balance. Sometimes they happen, those moves begin during the session. Sometimes they move, overnight. Obviously, that's where the move has happened, and we've had an effective gap. That's a big gap. We gapped over actually some key levels that were resistance. We shot straight through them, and now those are support levels to the downside, places we might look for buyers to step in. And believe it or not, we're pushing toward Monday's highs, which it's remarkable to think that we might be back to that. If we go look here quickly at a daily chart.
Go figure, huh?
Yeah. I wish I could say I caught more of this than I did.
You and me both.
But quite a remarkable. Been watching crude oil because we've had. Oh, sorry, wrong.
And when you look at that, you can also look at how we've gapped up now 2 days in a row. I mean, these are not small gaps; these are big gaps.
These are big gaps.
And so we've moved from what day was it? That was actually 4 days ago. So from Monday, at the bottom, the low on the intraday on Monday, we've moved from on the NASDAQ about 81.68, and here we are trading at 84.03. Yeah, wow. Some big moves.
Some big moves.
And they gap up and they stop, gap up and stop.
Mm-hmm. Yeah, so I mean, you can see there's a couple of levels of interest higher. Probably the most significant one would be 84.26. That was the most traded price. Well, one of the higher traded prices of last week during the RTH session. But we made lower lows for the week it will be remarkable if we actually close above Monday's open, and so until that changes, that's the expectation, as a trend day will continue, and it is shut off not by actual auction activity, but it's shut off by time, right? So then likely we would continue on into the next week. So just kind of a scenario, unless we get some significant selling, again, not likely. I think at this point the only thing that would show up to shut this off would be like a news event, primarily related to China trade. But I'd say if we close up here, kind of my plan for next week is to kind of watch and look for attempts up into this area, maybe even make new highs before we could find some sellers stepping in. Now note a couple things. I mean, this is a monthly profile. This is the most traded price for the month of November. We're into a new month, so if I look at the rolling, that 83.10, and then if you look at the slope of the profile, I call this the slope of hope. You can just see that while we've rebounded wonderfully, I mean, this was good trade location because you were buying below value. Up here, you'd be buying above value. We don't recommend that unless you have really, really tight stops. This is where you're just saying you're moving higher, but there's really nobody participating at these prices. And what's very, very potentially likely happens that we would start to establish a bracket of trade, of sideways trade, especially as we head into that December 15th tariff deadline. And so this could be the playground. At least that's what the expectation will be until that changes. But I'd say north of 82.70, probably south of 8,500, or up to 8,500 could be the playground for the rest of the year. Still a pretty big playground. 300
Huge
points.
playground.
I mean, we've had years when we did not see that much range. Wow.
That's crazy. So, hey, I see Dennis. Dennis, you have a couple questions. I think those are good questions. Let me cover a couple of these for you. CR charts, is that going to hinder your learning curve? No, not one bit. I mean, they have good profiles. It's just the way you set it up for yourself. Do we get a better rate here with Window Trader? Josh, I'll let you answer that one.
At present, we do offer a discount for the Window Trader Lite. We do have a code that we can give you for that.
Okay.
And then so Dennis, looks like he's getting ready to start his trial next week with us. So going through that anchor trade setup video, we do cover that all the time throughout the day. In fact, that's kind of the core trades that we look for throughout the sessions are those anchor trade setups.
Yeah, and then the other question on the trading room and education room, yeah, it's more of an education room. We don't sit there and call live trades all day long. What we do is we set out a plan every morning to look at, and we talk about it amongst the team, and we talk about who's taking what, where, when, why, and how, and we go from there. But yes, that is available. Going through your anchor trade setup video.
Yeah, that's what he just asked about.
Okay, all right.
That one. Yeah, so we got you good.
Perfect.
Yeah. I think Dennis, you got invited into Slack. So any of those questions pertaining to the trade plan and the participation next week, those are great to answer or ask in Slack, because then we can speak to those directly and kind of point you where those materials are.
Yeah, absolutely. Yep, perfect.
Yeah.
Look forward to it.
Yeah, one of the questions around trading development is, you're going to be a trader, you're going to be an order filler. I mean, if you want a service that calls trades for you, and that you just execute on, man, if that works for you, go for that.
There's loads of them out there.
There's loads of them out there. That's not our interest. Our interest is in developing people who want to be able to develop their own trade ideas. That's really kind of where my journey was. I wanted to be where I could walk away from markets and come back to markets and generate ideas based on what I was seeing. And that's what we look for in the profile. We use volume profile to identify areas of interest or price that we expect a certain type of behavior if we get to that price. For example, if we get up to 84.26 today, I'm expecting the auction to pause and slow down there. And why 84.26? In fact, why 84.26 better than any other price we've yet seen today is because that is a price within range that has had the most prior acceptance and two-sided trade around that, a place where we saw buyers and sellers stepping in. That's why that histogram is built out more, is because you had both buyers and sellers actively taking transactions there. So there's some price memory in the auction. So if we get back to that price, it's likely to slow the auction, and look for a place that if you were long, trailing longs would be definitely a place to target to get out, and potentially could be a place that we see those sellers step in enough to to move us back lower, and could be a potential entry to the short side. So that is. I'm gonna keep this open.
And hey, just as and one thing Josh talks about, here we are knocking, at Monday's highs or excuse me, last week's highs, and we're, hang on, we've took off last week's highs, didn't we?
No, not in the NQs.
Okay. So I was looking at the wrong chart. I was like, hang on, we did, but not CL. Sorry.
We did the ES.
Sorry, I was looking at crude.
Okay, hey, just by the way, I'm looking at potential, if we can get kind of below this 84.01 level, I'm looking for potential structure cleanup trade to at least get these singles down to 98. I'm seeing a little bit of selling stepping in here.
Yeah.
This would just be a little intraday trade, gang.
I'll cheer you on.
That's not in Jed's playbook.
It is not in my playbook because it's Friday. It is past 12 p.m. Eastern Standard Time on a Friday, and that's when I lock my account down. So
yeah, so this is what I'm looking at, gang. Is I'm looking at so one of the things that's powerful about using order flow tools like this is you can see where was the last impulsive activity right here on a small level. Right at 84.01 was the last kind of buyers. They did get a little bit positive excursion, but you can imagine as buy programs go in, and that's what these algos do, is there's buy programs that come in, and that's where you can see these little spikes are them adding buy orders. Well, you're not gonna go the other direction at all until you can start trading back through some of those. So if we can get below 84.01, that could give us an opportunity to potentially even start pulling back towards 91 yet today. Added to that, in the profile here, we've got what we call some poor structure. We've got a period where we only traded in one 30-minute period. We obviously have run out of participants even today. The slope of the profile is lower, and we're building a little bit of what we call excess, and value for the day is down here at 91. So if we run out of buyers and can start turning the order book a little bit, that could be a place that we could see a pullback. It doesn't break anything in the directional point of this auction. We'd really have to see some sellers stepping in below 91 and really maybe even get back below 68, which very low probability of today, unless we got some kind of news event. But there is a decent, if you can be patient for it, a decent high probability opportunity potentially here in just a second if we can get below that 84.01.
And maybe what you see today is, well, you do see it today, and you've seen a lot the last couple of weeks. This is where I was going, is that it's not a great day to trade today.
No.
And that's one part. Hopefully you guys are on here because each and every one of you want to become a professional trader. And I don't mean that in the sense where you're going to go work for a firm or anything like that. You're going to be a professional trader for your own funds. Yep. And that's probably the hardest thing to do out there. And part of that, other than the education is understanding when not to trade. Yeah. That's really very hard because, man, we get all jacked up and you feel the adrenaline and you love the markets, and like we all do, we love them. I mean, my goodness, this is one of the greatest opportunities I think around. But there's certain things you really need to apply to your trading to, like what Josh talked about early. Here it goes. To become consistently profitable. You're short.
Yeah. Stop above the high, gang.
Yeah. I'm cheering you on, brother.
The risk reward is not great. I'll tell you that.
Yeah. Well, let's talk. This is a great example. I'm not trading it. And why is that? Would it be on a regular day in the middle of the day? Would it be a trade of mine? Yeah, it would. But it's Friday and
Yeah.
it's in my trade plan. And that's part of my discipline. For me, it works for Josh, but it doesn't work for me. I've never had luck this late in the day with trading. Um, and so I wrote it into my plan that, okay, after 12 noon Eastern Standard Time, there is no more for me unless I've got a trade open. Then I'll finish that up and call it a day. I hope this thing rolls over and goes down 200 points for Josh, but it's going to go without me.
Very unlikely.
Yeah, well, we could get the tweet. So, but so that's called just knowing when to trade and when not to trade, and you can identify those things inside of your trade plan, which to become a really good consistent trader, you really need a plan. And if you don't have one, my advice, and I don't give advice, but I will say this, my advice in this deal is don't trade until you have a trade plan.
That's right.
Now we talk about the 4 questions, and those are very important. And those,
do it.
I really believe that those have to be part of that plan as well in your everyday execution and stuff. So, things you got to do like that. Josh has identified his risk here. He knew how to get into the trade. Josh is a professional as well. And this one's looks like it wants to work out for him. Just means that now he gets to buy me lunch when I'm in for it.
Absolutely. What in the world?
While we're watching Josh make money, do we have any other questions? I see Tony T's with us today. He's got to have a question or two.
What in the world? Almost there. Feel like I'm on Star Wars.
I know.
Stay on target. Stay on target.
So nobody has any questions? Anything you would talk about a market or?
Well, here's one other thing I want to look at, and I'm gonna need to hang on a second. I'm gonna need to unshare my screen for just a second here. Actually, we'll go back to the slides real quickly.
So while we're waiting for Josh to get back live here, let me ask you this, and go ahead and just type it in. How many years has each of you guys been trading? I'm just sort of curious, Go ahead and just put it in the chat box. You can just type the number. That's okay. Okay. Thanks, Dennis. Anybody else? Doesn't matter. It could be 10 years, could be 10 months. It could be, yeah. Okay. All right, good. So everybody has a really good idea of trading, or what obviously trading is and isn't, which is good. Success it would shock me if somebody's consistently profitable and sitting on our webinar today, but I'm going to ask, has anybody had any consistent profitability? Or is there a struggle that you guys are really challenged with right now? And you can place that in there.
Oh, shoot.
And here, I'll say this. This is my favorite thing. Everybody's a little nervous about saying something about what they don't do very well. Josh and I are not, we're not gurus, okay? So what makes us, qualified to sit up here and talk about this? Well, there's multiple things. First of all, we're consistently profitable. 2, we've traded for a gazillion years. And second of all, we've made every mistake in the book. And when I say that, I mean every mistake. We've had monster losses. We've had monster gains. We've done stupid things. We've chased markets. We've tried to buy falling knives. Keep going. I mean, I just name them all. We've all done them, right?
Run the gamut.
So nobody is, if you're worried about, well, that's, if I admit that I'm going to sound stupid, no, you're not, because we've all done them. So still struggling with the following profile after almost 20 years or
After
10
10
years,
years
10 years.
with volume profile.
So what are you struggling with? I'm sort of curious about that one. Want to work on consistency. I have some great weeks, but ups and downs. Try to streamline. Been exposed to MP and have done better, but self-educated. Okay, good. We're glad you're going to be around, Dennis. We'll get that all figured out. Yeah, I can't wait to hear about the struggling with the volume profile. I mean, that's a great, that can happen. Okay, maybe you're perceiving it, a different way, and we just need to look at that. So. Come on, take that low out for Josh. Keep going.
Well, while we're waiting for that, I mean, I think we're going to trade sideways a little bit before they break. But so, Johannes, your question: so is window trader enough for charting, or is it necessary to have a second platform like IRT as well to be able to learn about the program? I mean, you'll see me switch back. I think window trader is sufficient. One of the things that it does not provide is alerts. We use a lot of alerts because there are only certain prices that we want to be active at. I'm only actually even interested today because we got to 8405, and what's significant about 8405 is that is 50% extension of the initial balance, and we know that there are certain things that happen behaviorally when we get to about 50% outside of that opening hours range, and so that's a good place to look for it. It's what we call a dynamic area of interest. There are more static areas, like for example this 9750 that we or 95 and a quarter that we traded above. We spent a little bit of time there. You can see we spent, where's my mouse? We spent a little bit of time kind of, pushing in this area and then pushed above it. If we get back below that, I mean, I'm seeing that people are paying attention to this level. And so, I mean, that is actually an area in play. So, you have both dynamic and static, prices that you pay attention to. But really, I think the one is sufficient. It also depends on how many markets you want to track. Like there's, we have a playbook of setups that allow us to look for opportunities and not have to look at lots of different products. One of the things that, while we're primarily futures traders, stock guys look at thousands of stocks and, to try to find ideas. And they typically have a couple different setups that they're looking to express around those number of products. If you have, 10 to 15 different setups, you can look at fewer products. And so that's kind of how we are. And I can't answer that for you. I mean, it'd be whether you like looking at lots of different products, or if you want to just look at a couple products. It'll fit your personality. But we'll expose you to both. Because the idea is to try to figure out what's going to work for you and what's going to be easier for you to identify and adapt to. And it could be that you're like, hey, there's kind of one or two setups that I'm good at looking at. Okay, then I'll just look at a couple different products. We spend a lot of time looking at, our anchor trades, which are based around what happens in the first hour's range. You could look at, bonds and gold open at first in the morning. Then you can look at, like crude and natty gas and about 40 minutes later, and then another half an hour, you could look for the equities and grains. So it gives you kind of look for different stuff across, kind of stage time frames. All right, come on, sellers, get her done.
Get her done.
Get her done. Get her done. It's a good question.
All good questions. Yeah, so feel free to pop them in here, and we will get them taken care of. Window trading.
Okay, so now I want to make sure that if I get nervous if we get back above 804.02, there's some volume right here. If we get back above that, we could eat into this excess. I don't really like that. I want to see him stay below that.
Yeah. We haven't took a 30-minute low out though.
No, I mean we have a double bottom here.
Yeah, 83.99 is the.
And they're going to pop through this and boom, immediately clean up these singles. You see, there's only 79 contracts right there that's separating. Very little. It's been a low volume day all day. I mean, you can see here on the stats, gang. It's almost 60,000 contracts below where we would be typically at this time of day. And this is just looking at the RTH. So much volume took place overnight, but they're just not really doing anything.
Yeah, just these gap ups are killer, especially when we're in low volatility environments.
Mm-hmm.
And right now, what is the VIX trading at? Where are we at, VIX? Ugh. Still bad.
It's still bad.
Not even worth looking
All
at.
right.
Well, that happens.
Well, we'll see if they can punch through
And
that
it's
low.
trading like, all right.
Not real good access to the upside. I would not be surprised if they push up and make another new high here.
Are you guys in a trade? I am not. Josh is. So
yeah, I'm in a little short structure cleanup trade. I'm looking for these singles to be cleaned up down, really kind of get into this zone here as we move back towards value. So I'm leaning on this strength of selling that got through these last buyers here. But this, like I said, it may only just invite. I mean, look, we haven't been able to close below the 21 EMA the entire session.
yeah,
it's just the machines are in control.
And looks like they want it to continue on.
Yeah. And so,
what do we use to execute your trade? We use triggers, and Dennis will talk about that. You'll see a lot of that next week.
are you talking about platforms, or are you talking about?
Oh, good question. Yeah.
Probably asking about platforms.
Yeah. Oh, platforms. We all use a lot of different platforms. Josh is going to be using TT. I use a couple different ones as well. It's just there's so many of them out there, so it just depends on the broker you want to deal with.
Yeah, it depends on broker speed. How much are you wanting to? How active you want to be. I mean, good grief, you can use web-based execution platforms and be effective if you're looking at longer time frames. And by the way, this would be the closest I get to a scalp. I mean, but even here, I'm looking for points. I'm not looking for ticks.
Yeah.
If you're looking for tick type trades, then yeah, you probably want something that is just like ridiculously fast. But you probably at that point you probably ought to co-locate to the CME, and if you're have fiber to Aurora if you're going to do that. But
the big house in Aurora.
The big house,
yeah, I can tell you some platforms not to trade off of, like your Fidelity account, or or don't try to execute in Thinkorswim or something like that. It's just those things are not designed for that. So you'd want a futures broker that has a good execution platform.
Okay, let's see what else was on the agenda. So we were going to talk about we talked about non-farm payrolls. So a couple things with respect to non-farm payrolls, and let me turn on, because we got the stops in, so it'll do what it does. And if I get stopped, I get stopped. So let's go back,
because that means I owe you lunch, and I don't want to buy.
Oh, you don't know. You don't know me. You don't know me.
I'm just hoping for lunch.
So again, new highs are my stop here, gang. So the scene right back down here, 83.31, which was actually a bias level this morning. Pretty awesome. I'm gonna go here and label that. What was this? The 6th. It's good practice to carry forward these types of levels. It's very interesting how often we'll come back and revisit them. So be mindful of where those are. Same can be said for things like FOMC. And so what I want to do is see, when was the last non-farm or last FOMC announcement?
I think it was the beginning of the month last month. I need to go back and take a look at that.
So we have non-farm payrolls coming up, and here I think I have it listed on my. We've moved quite a ways from it, but okay,
Yeah, no,
so
I'm sorry. That was,
918 was not. That was one. I have to go out to the web here.
I think it, yeah, I was looking at this calendar here. I think it
Was it
maybe it was,
October? Like
yeah,
mid-October?
I think it was the last week of October. Now I look at it because all the Fed heads were speaking the next week after that. So yeah, it was October. The statement was read on the 30th, actually, FOMC statement. So
Was on the 30th of October?
yep,
Okay,
great decision. Yeah.
great. What I want to do is I want to go, I mean, one of the other things we talk about is deliberate practice around specific opportunities like this. And what I want to do is I want to go back and look at that day and how the auction behaved, and then kind of how you can use that information. You said October 30th?
Yeah, exactly. Yeah.
Okay. And for me, that's going to be so funny. You know, living in Colorado. So I'm in northern Colorado. JP is not, but one of the consistent things that happens for somebody living in Colorado is people who don't live in Colorado think that everybody who lives in Colorado smokes marijuana. So I got a text from a friend that was a meme about somebody in Colorado who's oh, it cracks me up. Trying to think if my playback will go back that far. I may not be able to go to the 30th. DTN has a limit on how far you can go. Yeah. All right, let's try.
Oh, shoot, I'm talking to myself. I didn't realize I've been explaining this. The question was regarding yesterday's afternoon spike around 3 p.m. Eastern Standard Time. I was long when we got the spike down that stopped me out. Was wondering if you know what happened. I laugh at that because guess what? We all got stopped out. We were long as well on that, and what it
Wait,
was is,
yesterday?
yeah, remember with the Chinese news thing, and then you got
Oh no,
short on
I
that
was
deal.
short.
You got short. I was long and got slipped, and then yeah, that was not a good deal. So
Yeah, that's been. I mean, two things driving markets that people are paying attention to this year have been um, totally either China or the Fed. And now that the Fed's kind of dormant, it's all China, and it just depends on, you know, if you don't see a lot of movement, you see volume dropping off. Typically, there's somebody waiting for, you know, some kind of announcement. Goodness gracious, this won't go back further than.
so it was just and you know that's the again why here's the good thing. I hope you got stopped out. You got to stop. That's what those are there for. You know, you got to look at it this way. There's that risk out there right now because we have social media and we have a president that loves to talk, and things get leaked to the media, and you know, you use those stops and those risk parameters for that reason. What if it was really serious and this thing rolled over down 300 points, and you didn't have a stop in, and let's say you came back from grabbing a bite to eat or something, and boom, you're getting killed on the deal. So yeah, Believe me, it's never totally fun, but that's part of trading. Good question, though. You won't, here's the thing. That's another great question. Is there a news, a possibility to get alerted when such news occurred? Well, you can follow, there's some news alerts that you can follow, like Live Squawk it's called Live Squawk, which is a Twitter channel. There's a few different live news events, but you're not going to be sitting there looking through every news event. What happens is when those news events happen, the algos kick in immediately. And to date, I'm not faster than an algo. So
Yeah.
wish I was, but I'm not. My mind doesn't think as quickly as algorithms, and because they can hit it quick and hard. So here's the best defense: use a good stop.
Yeah. Yeah. We're not, unless you want to get Bloomberg Terminal and pay that, like, forget it.
And
But
even
even then,
yeah, you're not going to be able to beat it.
you're not going to be able to beat it, because you have to be able to figure out what the sentiment and the momentum is, and you're just not going to be able to figure that out.
And if that's the case, then that what you're trying to do is not lose. And what I would caution you to do is, when you're trying not to get stopped out, or you're trying to be right on the situation, trust your stops. If you're in the direction, you believe that you've done your analysis, it's part of your trade plan, you take the trade, just like what Josh has done here. It's part of his trade plan. And he's taken the trade, he's identified his risk, and you got to trust it. If he gets stopped
stops
out,
to 8404 now. We're looking good.
yeah, and if he gets stopped out, he gets stopped out. If it works, it works, and it's just one sequence in thousands of sequences.
Yeah. Okay. Good grief.
Charlie Brown.
All right, so here was the last FOMC day, and this big spike. So a couple things that have changed since the way that Powell has done it now. It used to be that they would release the announcement. Now he does a press conference that pretty much goes to the close. But the release here is that 8072 area. So that actually is a level to carry forward. We have not. I don't believe that we've revisited it since then. So I need to add this to my chart here, because I don't think we've. I'm gonna add it to a different place where I keep all of these. And that was the 1030 FOMC. And then what's that price? 8027? 8072. So all right, so the June cut got us at 76.56. The September cut got us to 78.93, and the last cut was at 80.71. And we're priced higher, and we're priced higher because they believe that those cuts would go. So we're pricing in the behavior based on what's happened fundamentally. So they're references to carry forward. Now, sometimes if we revisit those, like for example, if we added cuts or started to roll back on cuts, that could be an opportunity to look at those as potential prices that we go back to, right? So if we're baking in the prices higher off of that last cut down there at 80.72, well, if we decide we don't need to have low rates, we did what we need to do, they need to raise it, then that they raise it back a quarter point, that could be a place to watch, to reference back to. And like with non-farm payrolls today, this move and people that bought off non-farm payrolls are good unless we revisit that 83.30 level, and so that'll be a reference to carry forward next week. And again, the references to carry forward to kind of know where they are and where the market has moved since then. So I can look at this and go, hey, this is all, pricing in the benefit of those job numbers. And that's about all you can say about it. Just like with trading off news, you can know when the news is, and you can identify where news events are. For example, this week, which part of it made this week really difficult. If you look at, okay, we had a really big move Sunday. Into Monday's open, we had this liquidation break, big move. So this was based on the idea that Trump said, I don't need a deal. I don't need a deal until after the election was essentially the idea. And then we had another move here where he seemed to confirm it. So that's a news event. This was a news move overnight based on an anonymous report that was released on Bloomberg Terminal that said, no, actually, we're going to potentially roll back the December 15th tariffs. And then we have non-farm payrolls today. So if you can identify those areas, you can kind of get an idea of the narrative and the story of where, the larger economic theme is impacting, the futures, especially because they're futures. And they're references to watch. The fact that we traded back through this level here, which was kind of the affirmation of, yes, I'm gonna put these tariffs on, and now we're back above that. I think people are thinking, hey, it's not as bad as we think it is. I think it's interesting that the place that non-farm payrolls took off was the place where this other one was at. Now, some other mechanics around that is that there's probably stops above that people that shorts. So people that were getting, after this move, they were getting short here. Their stops were above that, and so this is in some case non-farm payrolls. It's also just running stops. Just how much pain can we put on somebody? And they're using the catalyst of the non-farm payrolls to make that happen. Overall, when I look at the profile, I go, it's kind of dangerous to be long. Like you could fall out of bed.
For sure.
So that was kind of a long trip around. Okay, here we go. Come on, just a couple ticks.
All right, lunch, love it.
Just a couple ticks. I gotta figure out why I can't. I want to be able to. I need to call DTN because I don't understand why I can't go back and do a replay for like years. Like, just let me. That's kind of silly. Whatever platform you do have, especially as you're developing consistency, make sure that you can go back and you can retrade periods in the past and go back to periods that you don't remember or you weren't active in. We talked recently about just VIX levels. I'm better when the VXN for the NQ is over 15. I still need development work when it's below 15. Well, it's been a lot of time below 15, and when that happens, I typically get like one trade a day. When it's above 15, I can go and do better than that. So I've been working on trying to do more historical trades in periods like that, but have not been able to do that with window trader for some reason. All right. Yeah. We're almost there. Man, so close. I mean, technically they've cleaned those signals. All right, I'm peeling off just a little bit here. See if we can get a run back to the IB high. That would be awesome.
That would be, and I'm talking to myself again. So the answer your question, Tony, is I don't personally. I know some people who do, but I'm just not aware of the names of them. To me, the best, and I assume when you mean trade journal, you're just jotting down notes and stuff like that. If you're looking to, a spreadsheet to keep in each trade, we have our own that we use, that we just made ourselves. I do have one that I purchased many years ago. It's a beast. I don't use it anymore. But if you're looking for just a trade journal, um, just a cheap composite book works really, really well.
Mhm.
The key to the trade journal, though, is not necessarily jotting your notes down. It's actually reviewing your notes on a weekly basis. On a Saturday or Sunday, go back and read what you wrote, and then take note of the, some patterns that are showing up in your notes. That will
Mhm.
give you a really good idea, maybe what you need to work on or that you're struggling with. And, or if you need to try to talk to somebody about it, then for sure.
Yeah, good things to have in your journal are what was the name of the trade. So like this trade here is a structure cleanup trade. So I'm effectively the trade's good. I cleaned up the singles. That was kind of the opportunity. Um, Now that we have a lower low on a 30-minute, we could potentially rotate back towards the IB, which would be more of an IB extension fade trade. But as far as the structure cleanup, I mean, that trade was done, which is why I've peeled some off. Um, but what's the name of the trade in your playbook? What time did you put the trade on? When you entered, what was the entry price? What was the entry time? What was the initial stop and what was the initial target? And then once the trade's done, obviously where was the exit, and then what was the maximum favorable excursion? So that's how much did the trade go in your favor, to what price, and then how much did the trade go against you? That's maximum adverse excursion. So those metrics alone, if you just have those like in a spreadsheet, it can help you go back. So a couple things about that. So one, if you're picking good trades, you should obviously spend some time favorable excursion. Even trades that we talk about in our community, we may not get the eventual target that we wanted, but we spend a lot of time either at our entry or a little bit good. We rarely spend time with the trade just going against us and just get knocked out. So that's kind of the first thing. If you're picking better trades, you should be in profit more quickly, and a journal can help that way. And then finally being able to assess based on where the initial target was and where the entry was and where the stop is. Do you like the risk return on that? We try to target a 3-to-1 on those, of reward to risk, just knowing that you're not going to be right every time. And over time, if you look at that, things you'll find out is, hey, I'm better at this time of day. Well, guess what? You can actually just show up at those times. I mean, one of the biggest learnings that JP and I've had this year, that's really made this year a great year, is we've just waited until the IB or the first hour of trade was set, and just not try to be active in that that initial open, because it's just harder to get a sense of what's going on or where the auction is going to develop. If you wait a little bit longer, while there may not be as much opportunity, it's a much higher probability opportunity. And so you can judge those. Do you want the higher probability, or do you want the greater opportunity? Because
Yeah.
the greater opportunity could be greater risk as well, and that's always something that we need to be mindful of.
What it does is what Josh said. If you include things like that in the journal, then what you can do is see, a pattern. So, for
Mm-hmm.
example, if you're putting stuff in there that, is this defined trade, and this is one of your trades, and you're like, why am I taking that, right?
Mm-hmm.
And every time I take that, I lose that trade. Well, okay, I know logic says then stop it, right? Um, then those are the clues that you're looking for. Again, going, and I hate the word using a professional trader, but how about doing it for a living, right? Or just doing it consistently. Those are the things that you need to really work on, because here's the challenge with trading. You're on your own. Nobody's looking over your shoulder, asking you questions, telling you when you should do this or that or what time to show up. So you have free reign to do anything you want. You can click that button all day long, hop in there right off the open. I'm going long, I'm going short. And, if you want to stay long in this and have a long career, then this is highly advisable. That's the work that you have to put in for. Not hard work. This isn't difficult.
All right, we're flat.
He's out.
He's out.
So great. That's a great question. I'm actually glad you brought that up. I hadn't had that question in a long time. Yep, you bet.
All right, gang, we got about 5 minutes and then we're going to bounce.
Land that plane, baby.
Okay. we're gonna land that plane. Yeah, I think better opportunity is going to be Monday.
Yeah. So next week, here's how it works for us next week, guys. Monday should have some normal, hopefully normal trade. Tuesday, we're going to see trade pretty normal in the morning. Afternoon, it'll start to sort of, it'll, sort of get lighter and lighter because we're into the FOMC. Wednesday is the FOMC announcement. And, I used to sit around and trade that morning many years ago, and I just realized I was no good at it during that day. And it was just a terrible trading environment. And the last thing you want to do is try to guess the direction of that news announcement. And that's where people try to, I'm going to make some big money, and then they get their back ends handed to them. So we take that day off. We'll come back and look after, and then that'll tell us that'll help us give us a clue to what's going on Thursday and then also Friday. So that's the way we handle next when we have a big news event like that. And it's nice to have a midday or midweek, should I say, day off.
Yeah, you get 8 of them a year.
You do.
So,
and I like it.
Yeah.
Just don't tell my wife, because she'll put me to work doing other things.
All right. Well, thanks everybody for your questions and for participating with us, and we'll get the recording out. So a couple thoughts there were, about non-farm payrolls, kind of mark that price. Let's see if we get back to that price later, next week. We'll be watching the non-farm payrolls and how that goes in, or FOMC and how that goes into play. There is this December 15th tariff deadline that I think until that is, done, any price higher is possible on the hope of a trade deal that's been kind of lofting us. You can see the volatility this week. The big volatility has been, on the trade news. And, unfortunately, some of it is, not tradable according to your plan. And there's been all kinds of massive movement, lots of opportunity this week that I just didn't get an opportunity to take advantage of because I don't trade the European session. I don't trade the Asian session. So, the best one that we got an awesome liquidation move on Monday, but other than that, it's been sidelines.
Awesome. I'll say one last thing here. Coming into the end of the year, my trade plan says that next Friday is my last trade day of the year. That's intraday, by the way. I will still run a lot of options that I run throughout the year. But as far as me sitting in front of the screen, nope, it's not going to happen. Doesn't mean that there's not good trade. It's just in my trade plan. I would encourage you all that last 2 weeks of the year, really sit back, take a look at your year that you've done, some of the things you've done right, some of the things you feel that you haven't done wrong, where you want to go with 2020. It's hard to believe it's 2020. Holy cow. Didn't we just have Y2K last year or something? Yeah. And then do, like Josh says, go do some playbacks, watch how things unfold, how the profile develops throughout the day, throughout the week, et cetera, et cetera. Use this time to really study. I would caution you, and again, I'm not going to advise you, but I'd caution you to not jump in and start clicking the button live, during the holiday season. One, it can ruin your holiday season. Two, just spend time with your family and your loved ones. It's probably the better choice at this time. So,
absolutely.
And use it as a time to get prepared for next year. But
last thing I'll say, gang, with respect to the profile, if it's not yet evident, so the profile helps us see where value is on any given time frame. Know which time frame that you operate in. Also know that there's higher time frames than you at play. But just like for today, one editorial comment, and then we're gonna jump off. So we're trading above value for today. Today, value is right here at 83.91. So do you buy above value? Is always the question. We're trading
Right.
above value for the week at 83.10. Do you buy above value? We're trading above value for the month at 83.10. Do you buy above value? And why? Maybe you do, but the question is always why. So we always look to sell at or above value and buy at or below value. That works in just about all auctions.
Yeah.
And it works in this one too. So and we found that looking at kind of the day, the week, the month kind of grounds you and gives you an idea for where those places are. So I personally, I hope they just take this thing up to 8,500 and don't stop between now and next Tuesday. Like, please. Like, that would be awesome.
Yeah.
I'll sell the world.
Yeah, that would be nice. And they could do it with
And they could do it. They could do it.
FOMC, but
All right, gang. We'll talk to you soon. Have a great
all
weekend.
right. Have a great weekend. Take care, guys.